preparation and staying tuned with global events that can shift markets in an instant. In Beyond the Charts series, we will dive deep into the key events, trends, and movements from the past week to plan the week ahead with unshakable confidence.
Okay, so are we on? All right. So can you guys hear me? Let's start. So let me see the chat. 1 second to confirm that everyone can hear me. Yep, they can hear me. Okay. So hello everyone and welcome to Beyond the Charts series, where we break down economic data releases from past trading week and their effect on markets. We are also giving away 5 10K challenge accounts today, so stay with me till the end of this short live stream to know how to win. Now let's get to it. We're diving into the key high impact data releases and events from the past few days. So I'll break it down chronologically. So I'll explain what the numbers mean in simple terms and highlight how they shook up the markets this past week, like stocks and indices. We're talking S&P 500, Dow Jones, gold, major FX pairs like Euro USD, GBP USD, and USD JPY. This is aimed at you, Fundingpips traders. So I'll do my best to keep it straightforward and fun. Now, remember, these events show a mixed global economy. So, like what we saw last week, we saw some conflicting data releases. So, some positive surprises in the US, but we have some drags from tariffs, slowing growth elsewhere, and uncertainty around Fed policy. So let me share the economic calendar with you guys and let's jump in. 1 second, please. Let me see how to share. I think that's it. All right. Let's share this. Okay. So do we have full screen? Yes, we do. So let's start one by one. Let me zoom in so that you guys can see. That's the weekly high impact news. Beautiful calendar. Fundingpips calendar. Okay. Starting to talk like Trump. All right. So let's start with Wednesday, August 20th. So on Wednesday, the New Zealand or the Reserve Bank of New Zealand cut interest rates by 25 basis points. As you can see, the previous number was 3.25%. The forecast was 3%, and the actual result was 3%. So it came in as expected. Now, let me tell you what that means. As I said, the Reserve Bank of New Zealand cut rates by 25 basis points or 0.25%, as expected, signaling easing policy to support growth amid cooling inflation. So the inflation over there in New Zealand is cooling off. That's why they started lowering interest rates so that they can boost the economy and balance the inflation situation. If that's how to say it. Okay, so this is their first cut in years. They didn't cut before this time, before this month or before this week. This is their first cut in years, showing confidence that that price pressures are under control, but the economy needs a boost. So no big surprises here. The markets priced it in ahead of time. So the expected was 3%. So they were expecting to cut 25 basis points, and that's what happened. No major impact on the markets. The NZD USD jumped like 0.5% initially on the as expected outcome. but faded later. Now, what else do we have? What did we have on Wednesday? We had the UK CPI, or UK growth numbers. The previous was 3.6%. The forecast was 3.7%, and the actual came in 3.8%, which is higher than expected. Sorry, no, this was the CPI, not the growth. I'm sorry, I made a mistake. This is the CPI, not the GDP. So UK CPI, which is the Consumer Price Index, came in higher than expected, which is UK's inflation. So what it means is that UK inflation came in slightly higher than expected. So that was mainly driven by energy and food costs, plus some tariff passed through from global trade tensions. You know what Trump is doing at the moment is like he's throwing tariffs right and left. So it's still cooling from peaks, but signals that the Bank of England might pause rates to avoid rate cuts. To avoid reigniting prices. So the Bank of England started cutting rates, but this number, the CPI, because it came higher than expected, the Bank of England, which is the central bank in England, might pause cutting rates to avoid the reigniting of prices. They don't want the prices to go up again and to see inflation go back up, okay? So this keeps pressure on households, but shows the economy's resilience. Okay, so what was the impact? Nothing major. The FTSE 100 fell 0.4% on hotter inflation fears. FX measures, mainly the GBP USD, strengthened 0.3% on hawkish Bank of England vibes, because like higher rates support the pound. As I told you, they're going to pause rate cuts. So when they pause rate cuts, the interest rates stay higher for longer, meaning that that's more attractive for the pound. So if you have a cash deposit in the pound, you're going to get a higher interest for a longer period of time now. So that increases the demand on the GBP or the pound. Okay, what else do we have? We have the Eurozone CPI, okay, which is Eurozone's inflation. The previous reading was 2%. The forecast was 2% as well, so no change. And the actual came in as expected, like 2%. Now, I might have said that before, but no harm in repeating that. 2% is actually 2% inflation is actually healthy for the economy, because it means that businesses are hiring, the jobs market is doing well, people are getting raises at their jobs, so the economy is growing overall. So 2% is every central bank's target. They achieved that, them and Switzerland. So the Eurozone and Switzerland achieved the 2% target after the skyrocketing inflation that happened after the COVID pandemic. We saw 8%, 9% inflation, which was crazy. So now they're back at 2%, which is the healthy target for the economy. And they're keeping up the good work. They brought it down to 2%, and it's still at 2%. So what it actually means that it came spot on forecast. This gives the European Central Bank room to ease for if growth slows. So if they see that growth is slowing, they can cut rates so that they boost the economy. Okay, so when you increase interest rates, you control inflation by limiting growth. You limit the money circulation in the economy. Okay, so if you want to increase growth and increase borrowing, so that more money flows into the economy, you cut rates. So this number means for the central bank or the European Central Bank is that it means they can lower rates if they see that their growth is not as they want it to be. Okay, But of course, tariffs are starting to bite. Same story with New Zealand and UK. Trump is hitting everyone with tariffs. So not too hot, not too cold, which supports gradual recovery. Okay. So what was the market impact? Since it came in as expected, no major moves. The FX. Let's talk about the Euro USD. It gained 0.2% on ECB flexibility, but that's nothing to mention. It was very small. Okay, what else do we have? We have crude oil inventories. I'm not going to talk about that. The previous reading was 3.036 million barrels. The forecast was a shortage in supply, but it came in as a higher than expected shortage. So they were expecting to have a shortage of 800,000 barrels. The shortage came in actually at 6 million barrels of shortage. So that's why we saw the oil jump slightly in the past couple of days. Okay, so what else do we have? What else do we have? Okay, so we have the FOMC meeting minutes. So there was like the meeting minutes of the Fed's last meeting came out on Wednesday, which is the day before yesterday, and there was some guidance there. So what happened is minutes from the July meeting, because like they met last month, that showed most officials saw inflation, which is fueled by tariffs, as the bigger risk over jobs. Because like if Trump goes on with his tariff plan, that might hurt the economy and impact the inflation progress. Okay, so the US had 9.1 inflation after COVID, but now they're at 3.7, I think, or sorry, 2.7. So if the tariff plan goes on, or like if he goes on with this tariff plan, I'm talking about Trump, I believe this is going to be bad for inflation, and we're going to see inflation rising again. And that's, guys, that's basically why Trump or the Fed chair, which is Jerome Powell, is refusing to cut rates following Trump's requests. Trump is asking him to cut rates, but he's saying, no, I'm not going to cut rates because the higher prices will come from the tariffs and inflation will go higher. So I need to keep the interest rates higher for longer so that I can make sure that the inflation is moving steadily down to the 2% target. Okay, so in that report, there was no clear signal on September moves because on September 17th, we have an interest rate decision. So there's a Fed meeting where they decide if they want to cut rates or not. Let me fast forward it for you. In fact, 1 hour ago, Jerome Powell was speaking at Jackson Hole. Okay, so he was talking about monetary policy and about the future of rates in the US. And I believe we're going to talk more details about it. But let me tell you now the overall result. The markets are expecting an interest rate cut on September 17th. The odds of that happening is 91% now. So that's almost a sure thing that it will happen. All right, so let's go back to the FOMC meeting minutes because I get distracted easy. I want to go one by one. Okay, so the meeting minutes report. The Fed's hawkish tilt, which is prioritizing inflation, as I told you, suggests no rush to cut rates, even as labor softens. This keeps policy tight, but markets read it as wait and see ahead of Powell's speech, which was today. Okay, so the market impact was like nothing major. The markets started to move after today's speech. All week it was like no major moves. Let's now move to the next day, which is Thursday, August 21st. We had the US initial jobless claims. The previous reading was 224,000. The forecast was an increase in jobless claims. That's when people go and claim that they don't have jobs, they're jobless. So that's where we get the number from. But in reality, what happened, the actual number came in at 235,000 jobless claims, which is bad for the US dollar. It means that they need to cut rates to jumpstart or not jumpstart, to boost the work market, okay, or the jobs market. All right, so initial jobless claims, we're done with that. No major market impact as well. Then we had the Philadelphia Fed Manufacturing Index. It came lower than expected, which was bearish for the dollar, but it did not actually move much. Then we have the S&P Global Manufacturing PMI. That's an important number. That came in very positive for the dollar, and we saw the dollar reacting to that positively. S&P Global Services PMI, which was actually very positive as well, and it boosted the US dollar in the past, or yesterday, it was yesterday. And then we have existing home sales. It means that homes are changing hands between people. So people are buying and selling houses. So there is some kind of economic activity. So this is a higher than expected reading. Could mean that the economy is moving, and it's positive for the US economy. Okay. What else do we have? So, okay, we're done with that. So, like the existing home sales, even though the interest rates are high, so people are still, but it shows us that people are still borrowing money from banks to buy houses. So the high rates are not stopping people from getting mortgages and buying new homes. Okay, and when they get money out of the banking system and they buy houses or whatever with it, that money gets injected into the economy, which moves the economy. All right. Now, finally, we have today, which we had the German GDP. The previous reading was 0.3%. The forecast was minus 0.1%, which is a contraction, not growth. GDP is the gross domestic product of Germany. It measures the growth in the German economy. So it was expected to come in as a contraction, which is minus 0.1%, but it came even worse. It came minus 0.3%, and that's why we saw the euro drop really bad at the beginning of the session today. And then we moved to the Fed Chair Powell speech at Jackson Hole Symposium. I told you the result, but let's talk more details now. Now, for those of you who don't know, I'm going to explain it from the very beginning. Jerome Powell, the chair of the Federal Reserve, delivered a speech like an hour ago titled Monetary Policy and Fed's Framework Review at the Jackson Hole Economic Symposium. In that speech, he addressed that the U.S. economic outlook amid, he addressed that the U.S. economic outlook is facing challenges like tariffs, tighter immigration policies, because tighter immigration policies could also mean that this can affect or impact the jobs market, because the US relies heavily on immigrants for workers. Okay, so this could affect the jobs market, which is the Federal Reserve's dual mandate. They need to control inflation. That's their main job, to control inflation and to keep a healthy jobs market. Okay, they need to maintain a healthy jobs market. So that's why Jerome Powell was discussing immigration policies, because that affects his job. He did that while signaling a cautious approach to monetary policy. The speech emphasized data-driven decisions, so they're data-dependent. They wait for inflation numbers to come in and decide accordingly, with no preset path for interest rates. So let's break down the main points. The US economy remains resilient despite policy shifts. That's what he said. But growth has slowed significantly. GDP expanded at just 1.2% in the first half of 2025, down from 2.5% in 2024, mainly due to weaker consumer spending. Then Powell highlighted the difficulty in separating short-term cycles from long-term structural changes caused by trade and immigration policies. So he said, in this environment, distinguishing cyclical developments from trend or structural developments is very difficult. So Trump is giving Powell a hard time doing his job, because he keeps nagging and he keeps bullying him into cutting rates, while he's actually affecting the jobs market by his immigration policies and by the tariff policy that he's working on with his administration. Okay, so he's affecting the dual mandate of the Federal Reserve, which is inflation. He's affecting that by his tariff policy, and he's affecting the jobs market with the immigration policy. So he's hitting Jerome Powell with both mandates. So he's giving him some hard time. It's not cool being Powell these days. Okay, so I think that's it. I covered everything, but be careful, because President Trump is going to speak today at 8, which is in a bit. He's going to talk after like 40 minutes from now. So be careful of that. Watch for high volatility. And if you haven't closed your positions, make sure that, or you don't have, you haven't secured your positions, make sure you have your stop losses. Stay alert, because Trump can cause very high volatility in the markets. So now it's time for questions, because I just went through every single one of those. Anyone has any questions? Let's see. Okay, does anyone have? Thank you, Fundingpips. Glad to meet you. Likewise, thank you. Great to be here. Great to have you. Guys, don't forget to subscribe and stay tuned. That's correct. Thank you, Fundingpips. Thank you, Pradeep. Welcome. When a major pair breaks out of a multi-month consolidation but volume is below average, how do you validate whether it's true breakout or false move engineered by liquidity grabs? you will need to wait for closes. That's a bit off the subject now today, but I'm going to answer you anyway. And this will be the only question off subject I'm going to answer today. You can know whether it's a real breakout or not by waiting for a close beyond that consolidation or beyond that level or top range of the consolidation. By doing that, you make sure that the price is actually going to break and that the price actually broke. And for me, I wait to retest that consolidation range. So if it goes back to retest and we see that it's not being able to penetrate again or back in, then that's a correct breakout. Otherwise, that might just be a fake out. So I hope that answers your question. Okay, with funding pips, the future of traders are assured. Cool. Happy to see you live. Happy to have you. Amazing. The best things are provided by funding pips. That's correct. We try our best to give you the best. Okay, everyone can hear you. Okay, so I went way back. Now let me go down. What is the momentum behind these aggressive moves during news? Intelligent explanation and breakdown. Best stock firm. Thank you. Your name and my name is the same. That's an honor. I'll be honored to have your name. So even though I don't know you. What is the momentum behind? Knowledgeable, clean. Thanks for providing best knowledge regarding news. Are fundamentals important in trading? Of course they are, especially if you're swing trading or position trading, because anything can change the overall trend. But for me, I take my decisions based on technicals, not fundamentals. But I take my signals from technicals, and I wait for fundamentals to trigger the move I'm waiting for based on my technical analysis. Okay. So okay, your name and my name. We already awesome session regarding fundamentals. Thanks, appreciated. Thank you for coming. Slippage. Why gold has high slippage? Because it has high volatility. So it's the most traded instrument, and it moves a lot, and the volatility spikes in gold during times of uncertainty. So that's why you see high slippage or high slippages in gold. Although it is very liquid, but it has slippage because of the reasons I just mentioned. So, okay. Why is there a sudden spike without any red folder news? Okay, there wasn't a sudden spike without any red folder news. The problem is that you did not watch Jerome Powell's speech. So if you see here on our calendar, you can see that we have a high impact news Fed Chair Powell speaks. So, and that was 6 p.m. Dubai time. So make sure to follow our socials so that you can see our economic calendar. We have the weekly high impact news calendar. This is very important for you traders. So make sure you follow us on our socials to get this piece of art, which is the high impact news calendar. Okay. Such a marvelous prop firm becomes live to give insights from markets. Good to have you, sir. What is the momentum behind these aggressive? We just said that. We just answered that. Okay. So, guys, any more questions? Okay, I think now it's time to move to the giveaways. In order to, 1 second. I have learned a lot in your live stream. I'm honored. Thank you. So It's time to talk about the giveaway. So we're giving away 5 10K challenge accounts. The way you can participate in this draw is by commenting under this video after the live stream ends, and by sharing it with your friends. And in the comment section, tell us what if you have learned anything new today, or if you enjoyed the session, or if you whatever you like to write. And we will announce the winners on Wednesday during the 1 second. Let me make sure I have it right. So yeah, we will have it. We will announce the winners in Wednesday's fundamental analysis blog. Okay. So I hope this was helpful. I hope this was fun. I hope I didn't bore you guys with news. No fun things here. No charts. No nothing. So I hope this was fun. I tried to make it as fun as possible. So thank you for tuning in. Thank you for asking questions. And I hope to see you soon. Good luck, traders. And remember, trade responsibly. Bye-bye.
Trading isn't just about strategy. It's about smart preparation and staying tuned with global events that can shift markets in an instant. In Beyond the Chart series, we will dive deep into the key events, trends, and movements from the past week to plan the week ahead with unshakable